all CEOs, me included, we don't actually know what we're doing.
They're all sharks, so all you got to do, though, is know shark behavior.
I don't think we've ever talked about this before.
We can capture all of the wallet share.
First place you start is with the product.
That's just the first nut.
This is the Capital Stack. Hey everybody, this is David Paul, the host of the Capital Stack podcast, where I talk to founders, operators, and investors about all things value creation within startups. Today, I am speaking to Eva Ho, who is the managing partner at Fika Ventures. Eva has quite a long investing and operating career. Before Fika, she was at Fika Ventures, again, as a managing partner. And before that, she was an operator. She worked at, Applied Semantics?
Yeah.
Right?
Two companies, Actual and Applied Semantics. So.
And, you know, I was doing a little research, and someone wrote an article about Applied Semantics saying it was probably the most valuable Google acquisition.
Hmm.
What do you think about that? Is that true? Aside from the Android.
Yeah, I mean, it's hard to reflect because they bought so many things. It was its second acquisition, and certainly it was meaningful. But in all honesty, I think they bought the idea and the budding technology, and there's probably not a single line of code today that is what applies semantics, what they bought back then. But yeah, from an ideas perspective, from AdSense, given what it represents from revenues today, I would say it's fairly significant.
Awesome. So why don't we start off, Eva, talking a little bit about Fika, because I think that the world needs to, the people that don't know who Fika are, they need to know, and that's probably a small group of people because you've got a very prestigious firm in LA, and I'd love to hear about the Fika story.
Thank you so much, David, and so generous. Those words are so generous. So TX and I started Fika in late 2016, and both he and I were at different vehicles. Honestly, I was at SUSE, and he was at his own. He was managing his own fund through a family office. So, back then we were looking at Los Angeles, and we both of us saw an opportunity here to build something special together, and to build a firm that we were not able to achieve either at SUSE or at Carlin, where he was. The gap we saw was like LA just. I think we had a few firms here, but it's hard for me to think of one that was started by an operator and one that had the ambition to really tackle enterprise software. Now there's a couple of more, but when we started back then 7 years ago, there are very few firms that focused on, deeper tech, cloud tech, AI and things like that. So when we were pitching to LPs in our first fund, the story was, a bit orthogonal, honestly, and it was not an easy fundraise because folks were like, well, new partnership, is that going to work out? LA and enterprise, that doesn't really gel. And so it was a bit of an uphill battle, but, we were lucky to get some people that believed in us. And, the ecosystem has played out really nicely. So today, we manage about 350 million, a team of 10. We believe in being together. So we're actually all physically in Los Angeles, but we invest across North America and have stayed very true to the enterprise software. And of course, that's a very big umbrella. But we tackle most things B2B. We also do fintech. We do things like health tech, which I know, David, you and I chat a lot about. So yeah, it's still in the same umbrella, but we've expanded, I would say, our scope a bit. And hopefully still doing good work.
Yeah, no, I definitely would say that you're doing great work. From going from like a fund one, which I think everyone kind of has to really pick a niche or a story, and generally speaking, fund ones have to, go the geographic story, and it sounds like that was very key to Fika's first fund. And a lot of words are kind of thrown around in there. Community is one of them. And it's important to build entrepreneurship community, and we want to catalyze, LA founders. now you're much bigger and the world is much bigger. And with COVID, everyone's working in a bunch of different places. Is community relevant anymore? Or is it? I always feel like community is a little overplayed.
Yeah, it's such a great question. And I think not only VCs, but founders are probably struggling with this concept today. When we started, I think, and I work with a lot of emerging managers today, like it's important to focus. It's important to earn, the respect of people around you. You got to start somewhere. And I feel like folks who are too broad, and not everyone may agree with me, I think it's very difficult to win when you say, hey, like I want to do everything for everyone across all these geos, especially the type of service that we like to do, which is kind of high touch, being together, being in person, supporting founders in person. So I think the story started fine in that, we were a new thing in LA, and we wanted to win in a more provincial way. And we said, hey, like, let's demonstrate we could do good work in LA with our thesis and then slowly earn our way into other markets. So we took our time. Like, I think I would say one characteristic of our fund is we're fairly thoughtful, and some may argue a bit conservative in that way. Like, while there are a lot of opportunities all around, including things like crypto and that crept up everywhere, like, and other very attractive geos like Israel, et cetera. Intellectually, I would love to do them. Intellectually, I would like to do everything. But I think our team had decided to make a stake here, make sure, you are serving LA well. And we could talk about what that actually means, David, and then be able to expand and slowly grow out the firm to be able to service other people. But at the end of the day, all we are is a service to founders. And if we can't do that job well, then we're not really worth much. So I think we had to kind of grow into ourselves to do that. Community is a big thing for us. I think, I don't know, David, did you come to our First Look event this year? Were you able
No, I wasn't even invited.
Jesus, that's a massive.
God, you just I just rub it in.
Yeah, that's super weird. Because you're you're so, the relationship is so strong with you, not just me, but TX and everyone else. So that's a big oversight. We'll fix that for next year. But I think for us, community is not only about, having, a place and relationship with the city and the county here, but making sure that, the goodness that we build with founders from both their wealth and job creation and opportunities, that it not only benefits the folks that are inside the tech ecosystem, but it benefits others. And I think the folks that know Fika know that we do a lot of work here to make sure a lot of, again, those opportunities are available and accessible to lots of folks, because LA has lots of challenges. And the community is not just, rich tech founders that live in Santa Monica and Pacific Palisades. There's 25% poverty in Los Angeles. And we could go on, but LA as a city still has a lot of marginalized populations, where if it wasn't for certain people who committed to exposing them to the tech jobs and tech ecosystem, tech companies, they would never get this in their schools, et cetera. So, we built programs like Fika Academy, et cetera, that we could talk about. But community for us is a very broad definition of everyone that is encompassing the space here. That's just Los Angeles. Certainly we have community around the country and across North America, but I think you can say that we deeply care about LA. It's 10, 11 million people, and there's a lot of needs here. And we hope that, Fika will be, have a place that will have impact broader than just allocating capital.
Yeah, no, absolutely. And so as you expanded out, I'm sure that you had to, leverage other GPs in other markets for deal flow, to understand the markets better, understand, kind of who's doing what. How did you run the process of trusting other investors? Because, essentially investors are, they have self-interest, right, of their own books, right? So how did you know when you were getting a good opportunity versus you weren't? And how did you get across that finish line with trusting other GPs?
Yeah, this is probably one of the big sort of areas that a lot of managers continue to work on, including myself. Relationships is everything in this business. Our craft is based on all these relationships, and it's compounded over decades of work. And I honestly feel like I live by a basic tenet, which is like I treat other people like how I would like to be treated. And that means like with great respect, with great reciprocity. And I think over time, as I've gotten to know people and built that trust with them and alignment on the things that we care about, the priorities, like if I work with you, David, like I know through our interactions already, like I trust you even after only like 2 conversations because of the way we treated each other, right? Like when we were sharing, like I'm not worried if I share a deal with you that you're going to steal the deal. Like I just have that inherent trust because, you've known TX for like, this is an ongoing thing. And it just takes time, David. It takes time. So I think you could control sort of how you behave in the ecosystem, which is making sure you're behaving well and you treat other people well and you treat information well. And then you just have to do the hard work of like spending time to get to know people. And I think when people really click and there's alignment, you feel it, like you get it, whether it's physically or through Zoom. Like I think the first time I met you, it was so awesome because you were so proactive at saying, hey, Eva, like I heard you care about healthcare. We're both learning. It's a new space. It's a complicated space. Like let's just share and talk and explore. And I really appreciated that. I didn't feel like you wanted anything from me except to just like learn from each other. And that immediate first interaction was just like delightful. Other people I would get on and this is not a judgment thing, but they'll want to just probe me for like lots of stuff and want intros to LPs and whatever. I'm like, I'm happy to do that.
I mean, that's a big ask.
It's more often than you think. Because I think they see I'm connected to a lot of people on LinkedIn. And again, I'm not against that. And it's not like the bar is so high, like we have to be besties for me to share an LP. Like that's that's not how I work. But there's got to be some base, right? Like there's got to be some foundation before I think you can make certain asks. So I'm always very careful about that. And I think the way you and I started is the way I generally like to start is like learn, share from each other, get to know each other, beyond even work a bit. And I know now you're here in LA, so I'm really excited to know you physically in this, in space versus I think we've only seen each other through Zoom. So that's kind of how we do it. And all, the other 9 people, we all, they're with us. We brought them in with Fika, because we all kind of see the world in the same way, is that like, we hate being transactional, because that's only good. Like, even if you win one deal from someone, say you and I talked, you share something and I'm like, oh my God, like, I'm just going to go like do it because I feel like I'm better or whatever. And I win that deal. Like, how long is that going to last?
Right.
Are you going to call me again?
Yeah. Well, you can only do that once, right?
Yeah, you can only do that once. And the other thing, David, I think if there are folks who are getting in the industry and as well as founders, right? Like, I think when I started 10 years ago, I was pretty starry-eyed by like a lot of the big VCs. And, my old company was backed by some, big folks. And I had this like, like I was like a little kid, I was just like, why do I belong here? And I was like, so attracted to famous, VCs, like whether you're from, and I won't say firms, you can insert these very well branded blue chip firms and individuals that, had a lot of social capital and on Twitter and on panels. And, but as I've gotten into doing this longer, like it's actually very little correlation between how famous you are, to like the actual work that you'll do on the ground, with a founder. And so I think doing it over 10 years, like I actually really appreciate folks that are not, out there talking all the time, not, needing to, have like lots of exposure and influence, but they do the hard work of working with founders, being there for them, showing up, listening, and providing the right type of advice. Those tend to still be fairly rare, so when I find them, and I sense I have with you, like I hold on to them, because I can't say they're necessarily the majority. I love lots of VCs, but, when I find those gems of people that fit that criteria that I just mentioned, like I really try to hold on to them.
Yeah, bad advice is cancer.
Yeah, it's hard. And I think through the recent crises of both COVID and the SVB collapse, like you see some of the, human behaviors, like the worst of people and the best come out, because I think I was thinking through the SVB. I remember like exactly the moment where I was that day, and I'm sure you do too. But that day, like there were VCs who had a lot of money in these banks themselves. they're ultra stressed, and they're pushing that stress and imprinting that stress onto founders. They're calling founders like every 30 minutes, like, what are you doing? Have you moved the money yet? I was like they got it. They heard you. They're smart people. That's why you back them. Like, and I know you're stressed, so I had to call some VCs and be like, back off, dude. Like,
Right.
Gal, like, back off, because like
this isn't helpful. Yeah.
Helpful, but it's humans, right? Whether you're a VC founder, like we're made of the same thing. And so I think these last like 3 years definitely, highlighted certain types of people and really emphasize, the folks that we like we're definitely doubling down on them. So
yeah, no, I think that's right. So I really liked what you said about how you had rosy colored glasses coming in, big brand names, big Twitter followers enamored you. And you've kind of learned over the years that, that didn't necessarily correlate with success. I have two questions that kind of came off of that. One is like, what other things have you learned through your investing career that have changed drastically from when you started to now?
I would say a couple of things. I guess they all come from different perspectives. I think one, running a VC firm is like really hard compared to running a company. That's, that was like lesson number one, because in the VC firm, it's just like, small, tight communities with very different personalities, where we make just a handful of decisions versus operating where, I felt like I was making 20 decisions a day with a lot more people. That's number one. I think number two, I've been trying to like hone in on just personal biases and like the types of profiles of people I like. And I think that profile, not the fundamentals haven't changed, in that, certainly I'm looking for like outlier performers, people with good track records, smart, and high integrity, and all those things are just like, that's just like baseline stuff. But in terms of just thinking through about the ideas that we want to solve together, I feel like I'm even more ambitious in going after things that are bigger. In the past, I would say, hey, like there's some folks that are really great. And I'm like, oh, they're really great, but they're doing something that's kind of incremental. And I'm like, I'm just going to do it anyways, because maybe it's a base hit, whatnot. And I think after doing it for 10 years, like this stuff that attracts me, I think that's evolved a bit. Like I'm looking for bigger ideas, like people who are more brave in what they're pursuing, and maybe even quirkier, because it's easy to like look at the basic stuff. They have the pedigree,
right?
Have the track record, all that stuff, and say, hey, like from that, all that is really solid. And we do lots of references and stuff. But now I'm like, if you're a little quirky and you're a little out there, but I see that glimmer in your eye, like you're just like you're like going to be unstoppable in something, and that something is big. Like I feel like I would say my team finds it frustrating sometimes, because I think my bar for people and ideas have kind of, changed and evolved over time. I would say that's one of the things. I wouldn't say it's a learning, but it's an evolution. It's an evolution. And I think I've also, the other thing I've learned is I think this is not so much of a rules-based game. And I think, when I started, because our team's fairly analytical, it's very a bit formulaic. It's like kind of like these are the swim lanes. We just actually had a partner, little sort of hangout to talk about this. I was like, my advice to him is like, let's just be more brave. And, with all this AI stuff, like let's just spread our wings a bit more and give ourselves more latitude in terms of, even what we focus on, what we care about, because AI has changed so much of what possible things can be built. I wanted to give them the freedom to say, hey, like, I just want you to stay passionate, because this is a game that you can only stay in it because it's such a long game. You don't make money for a really long time.
Yeah.
Like, I hope what drives you is like this, like you're intellectually and, you're like just really excited about it. And those things change over time. So I feel like I want to give my team more license, like pursue the things that you really love so that you can stay happy at this sort of sometimes quite thankless job. So that's kind of a long-winded answer, but I would say that's sort of, I think when I started, like I wanted to please the LPs and say like, we do this, and then we're going to prove this, and then we're going to do this. And it's not like we're going like off, like off the graph here.
Rules get broken.
Yeah, rules get broken. So knowing when to make exceptions. And, we're also been known as like a pretty price sensitive firm. And, some people even call us like cheap. And I said, hey, like, again, AI is just one thing. I mean, we didn't do much in crypto, but, that's changed everything too, because some of these companies are more expensive. I don't have answers, and maybe that's good. We just got to stretch and not be so, I would say we're very analytical, we're very conservative, and changing to adapt so that the things that made us good 5 years ago may not be what's going to make us good for the next 5 years. So
besides being quote unquote cheap, and I hear the same thing about myself, what are some of your other biases? I think biases are so interesting, right? Like, I mean, we all have them, and it's like, I don't know if there's a profession on the planet that is more biased than venture capital.
Yeah, we are people who have like hardcore opinions, and
everyone's in the opinion business in this game.
Yeah, and we all think
but there's no rules, right? There's no rules, and there's a gazillion ways to make money in this business.
So many ways, and there's such a big element of luck, so it's often very hard to like pattern match successes to what you should do in the future. I would say some bias for me, like, and again, I think when you're building a firm with different people, like, I feel like the people should be different, in personality and areas or whatever, versus like we're all kind of the same. And I would say I'm more oriented towards like product. So my bias is like, if I see, a pitch, like very quickly, I'm like, I love this story. Give it to me in like 3 minutes, 5 minutes, whatever. Let's like go right into the product, because I feel like through the product, you could basically tell me everything else, what it does, what you aspire it to be, what's coming, who's buying it, how people are using it, what the reactions are so far. Like, I could just like see it come alive. Like, you don't have to show it 3 slides. And I think when I see, especially repeat founders, and I would say some of my teammates may or may not agree with me, who, when it's pre-seed, but they're like repeat founders, and they may even have had success before. They're sitting there like, oh, it's because, I'm David Paul. I founded some company before, so give me like $3 million to get started. If they don't have like some sort of demo that's beyond a Figma thing, like, I'm kind of like scratching my head, I'm like, what's up? Like, why don't you spend a couple of weekends doing something? And why don't you have, some engineers that are following you because you are supposedly creative and wonderful and brilliant. If that's what you're pitching to me, like, I would like to see something. And I think when they show up and they don't have anything, but they just want us to give them money because of who they are, I'm kind of like, ugh, Yeah, but I think some of my partners are, I think, a little less sensitive to that. But I'm a tinkerer, and it's a personality. And I feel like if I'm so passionate that I'm convincing you I'm going to do this for like decades, and make all these sacrifices, like I would have been on the weekend just like doing something, putting something together, touching it, feeling it, and proving to myself whether it could work by talking to some early customers before I asked for like, $1, $2, $3 million. That's kind of how I like to operate. And that's one big, for me, like I always like go towards that pretty quickly. So, I mean, that's a bias, but their companies have been built with just, sheer force of nature and personality where the product isn't that great. And, they take a different market. They might have outsourced engineering, which I don't love. And they've worked. So there's exceptions to everything, but I would say that's a big bias for me is like show up with something from a demo.
No. Well, I mean, it's kind of like they made their bones, right? And you're right. It's kind of intellectually and from an execution perspective, lazy, right? To kind of come out and to do this. And I would say it's for sure a signal that they're not as capital conscious with your money than they are with their own or their own influence. And, let's say that 3 million didn't come, like, would they quit, right? From you or the first 10 people before they did something else. And, no, I agree with you completely. You do a lot of nonprofit work, like a lot.
I do. I've been, it's a big gift, because I think, I'm sure there are people who will be listening. I'm not ultra wealthy. I'm not, definitely not I'm self-made. There's like no generational money, not even a cent. So I'm not, I guess, like I'm not one of those that made a ton of money and then sitting here and like writing $1 million to get on the board of a college or something like that. And there's nothing wrong with those people, because certainly that's needed too. But I've been lucky that I've had people from the for-profit world and or other folks that have passed through life with me that seen sort of the work I can do, and they know the things I care about because of where I came from, that they just brought me in. And it's addictive, David. Like, I know you do work here too, so it's addictive. You know, people don't get it. Like, people feel like, oh, you're such a goody two-shoe, and and I'm like, no. I was like, I think my husband often reminds me, like, when I'm frustrated at my VC job because, like, a sharp elbow got thrown out or whatever, and I'm just like frustrated by something. He's like, Eva, just like go back to that place, because when you come back from some of these nonprofit meetings on whatever issue, he's like, you're just so jazzed, like you're so alive. Because I think it reminds me when I'm doing work for folks who probably in LA are the folks who are struggling the most, right, with housing, with food insecurity, with whatever, foster youth or, people coming out of probation, like there's no understanding of that life compared to the life I lead. I live in a very comfortable home here in LA. On a daily basis, if I don't stretch into that world a bit, I'll never touch it, So I'm pretty sensitive to those things when people like complain about, homelessness and stuff like that. And, I often wonder, I challenge you to spend one day in their shoes. Like, like go sleep on the street just for one night. I'm not being facetious. But I'm like, if you do that, then you'll understand why there's addiction, why these folks, what it means to be in that situation, and then I think you'll have a softer view of why we as a society need to help to fix it, versus like judging and criticizing and blaming, and, being disgusted by it. Like these are fellow human beings, like they're no different than me and you. They just had a very unfortunate lot. So anyways, those are the things I think keep me grounded, when this world of high finance and money and power and, whatever, when I spend time there, I'm like, this is the real thing.
This is real life. Yeah.
This is real life,
Yeah. It's so much ego. It's like drinking from the ego cup is real, in this business. And, it's, when you get defeated, it is for me definitely important to kind of realize my priorities. I heard a really great quote yesterday. It said the only people who care about how many hours you work during a day are your kids. So that was a gut shot for me. Unrelated, you talk a lot about helping founders and being there for founders. If you were to rank the importance of fundraising, deal sourcing / I would say getting deal allocation and helping founders, where would you weight on a scale to 100% each one of those as far as the level of importance?
They're all important, because if you disregard any of them, like, I don't think you have a good fund. I think you could have a fund. You may have one fund, you may have two funds, but you're not going to have a generational fund, because fundraising, like TX and I are not great fundraisers. We never have been, and we probably never will be, but it's part of the job. Like, so,
right.
I have some other funds where they, like, one partner just hates it and will never do it, and the other does everything. And, good if that works for them, but I feel like nobody truly loves that part, because it's not the core of the craft. But we got to split the responsibility. So when I talk to young managers, that there are two of them, and they're like, oh, how do we go about this? I was like, you split it. Number one, you have OKRs you got to do it. Like, it's not fun. But hey, you expect your
pipeline. Yeah, it's sales, dude. Put on your selling shoes.
Totally. And if you expect your founders to do it because they have to sell, then you kind of just have to, like, live it and do it. And so you don't have to be excellent at it, but you got to commit to it and do it in a high integrity way. The other thing about, really quickly, in the fundraising thing, I think, when I think about the LP community, from day one, I always wanted to treat LPs like my peers, my coaches and like people I truly respect. I have managers out there who see LPs as kind of like a bank. They're like, I'm so like, they want to sell to them. They want to wine and dine. And then when the money comes in, they're like, oops, like I'm out of here. Like they don't return calls and, they're not reachable. And a lot of LPs will, reach out to me and complain about that. I don't see it that way. And I think right now with this environment, like I actually feel a lot of burden and responsibility to return, to drive a good return because a lot of my LPs are small colleges and hospitals and things like that. So that's one thing I think if you see LPs in a different way and understand their pressures, I think you have greater respect for them and hopefully greater affinity and chemistry, and that relationship is actually nourishing and not, transactional, which I think a lot of fund managers see as like, it's like a evil that I have to deal with. And, like I'll do one dinner with them once a year when, and that's kind of it. And I don't see it like that. So, my LPs are my friends. And when I hang out, like, I respect their work. And anyways, and then I think the middle, which is like picking, winning, it's like picking, it's sourcing, picking, and then winning. There's actually like three parts, and very few actually good at all of those.
Right.
And I think if you're not good at all of those, then you need to have a team that's good at those things, because some people are great at sourcing, but we have a really hard time winning, and some people just all care about winning, but then they pick bad things. So I think that middle part, and then the support, like. Again, it depends what you got into this for. I mean, I think there's some funds that write small checks, they write lots of them, and they don't have a bandwidth to solo GP, so they can't, provide that support. And many of them do set that expectation. But so much of the joy of our, for me at least personally, is like to be able to work with these founders and have, a little bit of impact beyond money. That if I wasn't able to do that, I would. Be unhappy. Like I probably wouldn't do this job. So
you'd be a bank, right?
Yeah,
I mean, that would be.
I'd be a banker. I might as well go work for a hedge fund and make a shitload more money than what I do today. So, but again, you have to titrate that, because I think I can't remember if it was Charles Hudson or somebody that recently like tweeted about it, like some people think the job is X. They come in for this job and they're like, oh, it's great because I love mentoring and I love advising and then they realize, oh my God, running a fund is like 90% all this other stuff.
Yeah.
It's super hard, right? The admin.
Well, right. I mean, there's only so many times you're going to talk to your founders, right? I mean, like you might talk to them once a month, once a quarter, right? Just because it's not even so much your bandwidth, but it's their bandwidth.
Yeah.
Like you can't be in their business all the time because they're running a company.
Totally. And I think it takes a lot of also just like self-awareness and training and watching to be the right support, to be the right, kind of board member. I just did a little, roundtable on board, what it takes to be a board member, because a lot of people also like take for granted that role because it's so sexy and they want to throw it on their LinkedIn, but it's a real role that's really hard to do well. Anyways, like I think it's like on any given month or month, I guess is probably a quarter, you'll calibrate differently on percentage wise of that 100% across these different areas, depending on where you are. But I kind of feel like in that senior team, you kind of have to be good at all of those.
Yeah. Or at least develop the bench to be.
Yeah.
I've got a question. This is so interesting to me. This might turn into like a 3-hour Lex Friedman podcast, by the way. So I hope you have time. Buckle up.
I have reserved the whole afternoon for you, David.
Okay. Seeing LPs in a different way, that to me is super interesting because, as you said, you have to come in, you look at them as your coach. This is an ego-heavy business. Is that like an Eva Ho natural thing to kind of have that, or do you have to force that mentality in your head, about treating these LPs with the respect that they deserve? Because it's just like I just know from the business of how grueling it can be, and it's just like it's easy to treat them like the enemy.
Yeah, I think it depends. How many. It depends on your experience with these people, because I think when we started, we had less choice of who we, honestly allowed to come into the fund. It was kind of like every $25,000 check, I'm like, yay, awesome. I didn't really think like, I'm a good person. Like,
right.
I needed the money to get going. We needed the money to get going. But, fund 2 on, I was like, we have a little bit of choice. Not like a ton. Like we're not like deeply oversubscribed. Like I'm not going to make that crap up. But suddenly I'm like, there's all these different types. And I'm like, if I'm going to choose this person, like, when you talk to somebody, you have chemistry, just like me and you. Like, if I meet an LP and like we get each other, and and maybe that LP has a vehicle or a vehicle that is more mission oriented. And because they know who I am, often they'll lead with that. They're like, I'm talking to Eva, but let me just share like my foundation, in Pittsburgh also does all these cool things because they know I care. And I'm like, really? Like, tell me more. Like, what do you do that? Like, I actually like really dig in, not like, oh, you're mission oriented. How cool, kumbaya. Like, it's like, I actually just want to like hear about exactly what they do. And I'm like, wow, that conversation just became like a real thing, like then we're really getting to know each other. And of course, like we could talk about, fund metrics and all that stuff, whatever. But that's where it feels good. And I think we're lucky that we have LPs that I actually like care about their mission a lot. And I want them to succeed, personally and as, whatever vehicle that they're in. Often I will send like possible, LPs to them because they're always raising money. And if I know they're good people and I meet some wealthy family, I'm like, oh my God, like that LP, they're pretty great. You should chat, So it all comes back together. And when it compounds in a way that's more than, hey, like, send me your capital call every quarter, it's so much more rewarding, And I don't dread my conversation when my LPs come to town, or if there's some of them are in town, when they say, hey, Eva, you want to grab a cup of coffee? I mean, yeah, there's a couple exceptions where they're, a little bit difficult, but most of them I'm like, sure, like come by. Like, I don't feel the stress, I don't have to like put on my like nice shirt.
Blazer, yeah.
I mean, whatever. Yeah, exactly. Like I feel like let's hang and let's talk real talk. And, I think they feel like I'll give it to them straight. And I hope vice versa. Like I'm always just like, are we doing okay? Like, are there any things like, like give me some real feedback, like, so that's way more fun because that's like, that thing is a big thing, and I feel some managers are just kind of like dread, like they hate like the whole LP part. And I'm like, that's kind of a little sad, that if you're raising every 2 years that you're just going to have like a miserable, like,
yeah, you got to change the mind. You got to change the mindset.
You got to change the mindset. They're just like you and me, right? They're like at a different layer, but they also got to return money, and it's the same thing, right? So I'm kind of like,
everyone's got a master.
Bingo. We're all motivated by the same things, and I know when they also say, hey, like, I always look forward to hanging out with you, versus they're like, oh, okay, I got to go to this AGM. I got to shake these 4 hands. I got to check on these numbers. Like, they're like, oh, I'm really excited to hang out with you. I'm like, really? They're like, yeah, like, we're going to have fun. Like, there's going to be a good conversation. And that's cool.
That is cool.
Yeah.
So you brought into this spectrum, which I've never even, I think someone brought this up to me a long time ago, but I haven't revisited thinking this. But you broke up deal sourcing into 3 categories: sourcing, picking, and winning. I want to talk to you about picking. Right. So would you consider yourself a good picker? And like, what makes a good picker?
Oh, that's so hard to answer, David, because it's such a long game, and I would behoove myself to say, hey, I have like 6 companies that I picked that's like worth several $100 million today. What does it mean? Like, until I have like DPI and like DPI from companies that I'm proud of. Right? Like if I have DPI from a company that was like, a shitty CEO, but somehow we sold for $500 million, like, that's neither here or there for me personally, honestly.
Right. It wasn't an easy money to get. I've had those. It
wasn't easy money. Yeah. And I think for me, like picking, and I actually had this conversation with some of my partners, like we're driving towards like, are we like picking companies that are really going to sustain and endure? Sorry about that. Sustain and endure, because it's easy to have these like multiple markups. It's easy to see a product utility. It's easy to see some good, happy customers. But for me at least, and my team, like the end goal is to have a company that's going to be around for like 50, 100 years, like that it's going to be this transformational company that created a lot of value for a lot of people. That's the dream, to get there, will we have to do like a couple of onesie, twosie exits or whatever? Sure. But that's from picking. So I think some people have the bar of like, oh, if I pick a company and I flip it for 3X and I pick, in every portfolio construction I have for companies that are on 2x, 3x, and that's fine. And that's fine. And that's important. I mean, portfolio construction is ultra important. But I want to be able to say like, hey, like I was able to, find a couple of times. So time will tell. I have a bunch of, value drivers.
Yeah.
But, I've done this long enough and I've been part of companies long enough that what looks great today could be, could go sideways tomorrow, right?
Well, totally.
So, we not all of us are living this now, right? There's the reality. It's like you get a slap in the face type of thing. So, I'm not counting that yet, but hopefully I'll prove to be a decent picker, hopefully.
And if you look at the ones that have gained velocity, right? And, again, I get DPI versus TVPI. And for those who don't know what that is, that's actually receiving money back from the fund and not just getting unrealized gains. But from the ones, a lot of these early stage investments go flat and they flop. So, I mean, for the ones, and let's just assume that, there's going to be a liquidity event. Would you say that you're decent, or is there like an because I feel like it really kind of comes down to like investment committee, right? I mean, like, does everybody kind of just like vote at Fika, on an investment decision? Does like a partner champion it? Like, how does it work?
Yeah, that's one of the hardest things to get right, especially as your team grows, is like how you make these, very select decisions. For us, we do have a voting system. We have, and then it's weighted differently depending on your areas of expertise. Like TX does a lot of fintech. John does a lot of data infrastructure. I do more health and applied AI. So there's more weight if you want to be the sponsor of a deal. If that partner really wants to do it, I think that's kind of how we think about it. And I think right now it takes two partners to be excited about a deal to get a deal through. And then everyone else obviously participates, provides insights, and, help do a lot of the hard work. So it's a very much of a team effort. But it's hard because picking is such a personal taste thing. And as you add more people to the team, I was just chatting with other funds because the more people, the harder it becomes because we all have so many biases and so many triggers. And it's kind of like, oh, you bring something. I was like, oh God, like I just, like my gut's like, oh, I hate that. Like whatever.
Yeah, totally.
Yeah. And I was actually just with a GP friend of mine right before this, and we were talking about culture, right? Building firm culture, and how do we make sure we have the right, culture makeup to make these decisions optimally. And it's a constant evolution, right? Because it's kind of like, if you bring a deal and, I may not like it, like how do we prosecute this, right? And every team is different. Some people always like sort of softer and be like, oh yeah, go do more work and bring back stuff. And others are kind of like bring that in hand, like we're not going to do it. I'm going to veto that deal. Some people do it blind, so blind voting and whatnot. So to be honest, we're still evolving because our team has grown quite a bit. But my personal preference is active debate, actively disagree, but don't be disagreeable. And be like intellectually honest, right? I will get more confidence in whatever you are pitching. Like if you bring me information, you justify sort of why you landed at those conclusions. Like you can convince me, but I need you to do the work. And I want to see convictions that's evidence-based conviction, not because somehow like I woke up and I really wanted to do this, right? So that's kind of, and I also want to support contrarian decisions, right? Like, cause some of those are the best. So like if you bring something and I'm like, it's not my thing, but you're like, Eva, I really want to do this because I've done the work. I love it. Super excited about it. I'm like, go for it, David, do it. Because that's where you got to just believe that instinct and that work and trust that work. Right. So I'm trying to set my team, giving them more freedom to get to that conviction on their own. Because it's hard because there's power dynamics, right? Like some people are afraid to speak up, in a meeting, or
they don't want to argue with the GP, right?
With the GP, or if it's an area that they don't know very much about, they rather not say something that's slightly off, because they don't want to be judged. And this is a developmental thing. We all got to work, and I encourage just please disagree. Please say, or please ask me questions to challenge my hypothesis. Like that's the only way we're going to get to a better outcome. Because if it's all kind of like, oh, even TX, what do you think?
Right.
then it's no fun for me. It's no fun for you. So I think, we're trying to still perfect it, but that picking is very, very critical, And I would say most firms are still figuring it out. Like if it's a small firm, which I envy, by the way, like if it's two partners and they make all the decisions, it's probably easier, like a homebrew, I think, Hunter and Satya are very super aligned on the things they like because they've been together for so long. But most other firms have other people, and you want to take account of their thoughts and their work and their research. And it's a evolving thing.
Totally. I told you I'd ask good questions. It was good. You did not disappoint. You did not. Our questions too. I called my shot. I said, "This is going to be a dope interview." Are you drinking a white Russian? What are you drinking? Are you day drinking?
I wish. It's just a home Starbucks cold brew here, homemade.
Awesome.
Homemade. So.
Eva, I've got 1,000 more questions, but I want to give you your time back. Thank you so much for coming on.
Thank you for tuning in to the Capital Stack Podcast. Make sure to share this with someone you know that can benefit from this content. Remember to support this show by rating, reviewing, and subscribing. David Paul is the founder and general partner at DWP Capital. All opinions expressed by David and podcast guests are solely their own opinions and do not reflect the opinion of DWP Capital. This podcast is for informational purposes only and should not be relied upon for decisions. David and guests may maintain positions in the securities discussed on this podcast.